Hello CA final students. This is Professor Pragnesh Kanabar. I hope that you are doing great and I know that you are worried about your preparations of audit subject. So do not worry. In this particular video, I am going to discuss a pain point, alright, and that is audit of NBFC non-banking financial companies. So as we know that there are certain amendments, alright, in the May 23 amendment PDF that Institute has circulated, there are certain amendments that they have printed over here. Let me tell you, actually lots of NBFC directions have changed, but you should be thankful to the ICAI. Either they were not ready or they have thought to include those amendments later on in May 24, November 24 cycle. So they have printed very limited set of amendments, alright, which will not have a large impact on your preparation. But yes, it is a significant amendment that we need to get through. But what I have decided is to shoot a new audit of NBFC video itself, alright, so that everyone is very clear about every single point, because these amendments will make you feel that it can have impact on other points also. So it is better to discuss right from level 0 till the end the topic of audit of NBFC. Alright, okay. So now everyone over here, what I've done is I've created this set of notes including the amendments, correct? And I've uploaded these notes on my Telegram channel. The link of that Telegram channel is in the description of this particular video. And for the students who are on my app, by default they get the link of the Telegram channel and stuff. So you can take the notes from there. And as we see over here, I am ready with the ICI module, everything with respect to amendments and also what is the syllabus, correct? So let us start the discussion of audit of NBFC without wasting time. I will try to keep this video crisp and to the point so that you do not have to give a lot of time. Okay. So when we talk about non-banking financial companies, yes, non-banking financial companies are regulated by Companies Act 2013 and heavily regulated by RBI directions. So they are registered under Companies Act, but they also need a certificate of registration from RBI to operate. Correct. Now, when we talk about non-banking financial companies, which company is called as a non-banking financial company, correct? So that is a major impact that we need to understand. Everyone please focus on the definition. This particular definition can have a very big impact on the discussion of CARO 2020. Okay, so RBI defines NBFC as a financial institution which is a company. So if there is a company with the object of financial institution, RBI says that okay boss, please consider this as a NBFC. That means the object of the company is accepting deposits, lending. All right. Okay. Then RBI says a non-banking institution, which is a company which has its principal business receiving of deposits under any scheme or arrangement or in the manner or lending in any manner. So if a company is not incorporated as a financial institution, but the company is just incorporated as a company, but the main business is accepting of deposits and lending, all right, then in that case they are saying that please consider it as NBFC. But then the problem is that when do you say that principal business is the business of accepting deposits and lending advances and stuff? How do I find out that yes, this company is a NBFC? That was a big confusion. There was a big confusion, and that is why RBI came up with this 50-50 rule. All right, RBI came up with this 50-50 rule because sometimes some companies as a side business also they end up giving some advances and accepting some deposits. It could be a part of their side business. Their main business could be something else. All right, like construction companies and stuff. That is why RBI had to come out with clearly a 50-50 rule. Now this is one of the most important points for the MCQs. All right. And this is the only point that you need to remember, which they will try to test. Okay. The company will be treated as NBFC when company's financial assets constitute more than 50% of the total assets, netted off by intangible assets. I will discuss it. Let me just read. Acha, the language of this particular video is 100% English. All right. For pan India acceptability. But if you focus, even if you're not great in English, if you focus, I think you will be able to understand the whole video. Okay. So companies' financial assets constitute more than 50% of total assets, netted off by intangible assets. And income from financial assets constitutes more than 50% of the gross income. Such company would be required to be registered as NBFC by RBI. So they are saying that focus on balance sheet. In the balance sheet, focus on the asset side. Focus on financial assets. Sir, what will be called as financial assets? Loans and advances and investments. Okay. So let us say if loans and advances is total 30 rupees. Investments is total 30 rupees. Then 30 plus 30 turns out to be 60. Okay. Now check the total assets of the entity. Let us say that the total assets of the entity are 120. But in that, intangible assets are 20 rupees. Then you will minus intangible assets. Then turns out to be 100. But out of this 100, 60 rupees is financial assets. Correct? 60 rupees is financial assets. Then in that case, total financial assets are 60%, which is more than 50%. Correct? So your numerator will be financial assets. Your denominator will be total assets minus intangible assets. Correct? And you will check whether that is turning out to be more than 50%. Then look at this. Income from financial assets. They are now saying that please check the P&L item. Please check the P&L. Alright. In P&L, please check the income part. Let us say that the total income is 100. Income from financial assets. What do you understand by income from financial assets? Yes, interest income, dividend income on the securities. Correct. So if the income from financial assets is more than 50%, so your interest, your dividend, focus on these areas. All right. If it is more than 50% of the gross income, then in that case, this company will be NBFC. So two criteria. Come on, tell me. Both the criteria should be fulfilled. Yes, both the criteria should be fulfilled. You will check the latest audited financial statements. First asset criteria, second income criteria. First asset criteria, second income criteria. I repeat, first asset criteria, second income criteria. Asset criteria, financial assets should be more than 50% of the total assets, netted off by intangible assets, and income from financial assets should be more than 50% of the gross income. Yes, sir. Yes, sir. Yes, sir. If both the conditions are fulfilled, then in that case, the company will be treated as NBFC. Okay. But listen to me. If you are NBFC as per this definition, you need to obtain certificate of registration from RBI. You need to obtain certificate of registration from RBI. But then there are so many companies which fulfill this definition, but they are actually governed by other regulator. What do you think about insurance company? Don't you think that the financial assets of an insurance company would be more than 50% of the total assets? Don't you think that the major income of insurance company is okay, premium is an important income, but actually they invest our money into securities market and they try to earn from that market. All right. So the major income from in the insurance company, what if the financial income is more than 50% of the gross income? So it is very much possible that it may fulfill the asset criteria also and income criteria also. But then insurance company is governed by IRDA. RBI cannot ask insurance company to obtain license from RBI. So you know what? Because of this definition, there was a lot of problem. Because so many companies which are actually governed by other regulators, I repeat, so many companies which are actually governed by other regulators were getting covered in this provision. And that is why RBI had to give a separate list of exclusion. First, I will take you through that list. Companies exempted from registration under RBI. Mostly you will see that these companies are actually regulated by other regulators. All right? So look at this. Housing finance institutions regulated by National Housing Bank. See, let me tell you, the content over here is as per May 23 module and amendments issued by the ICA as per May 23. Because if I actually cross check everything with RBI circular, all right, then there are some errors in the module. But I know that they will go as per their module only. So I'm teaching as per their module. Okay. So everyone over here. Companies exempted from registration under RBI. Housing finance institutions. Merchant banking companies. Merchant banking regulated by SEBI. Stock exchange, stock broking, venture capital fund, all regulated by SEBI. So let us adopt a shortcut: SEBI regulated companies. Then needy companies, actually chit funds, huh? Yeah, accepting deposits from the members and then lending and stuff. So it is regulated by Ministry of Corporate Affairs. Then insurance companies are regulated by IRDA. Chit companies by Chit Funds Act. Now listen to me, everyone. Securitization and reconstruction companies, they are regulated by SEBI. All right. Now look at this. There are some companies which are actually regulated by RBI only. Okay. But these companies have been included in the exemption list. I will talk about these companies. Wait, relax, please. I will talk about these companies. Don't worry. Let me teach more about the types of NBFCs, then I will cover the discussion. I just wanted you to see the list from A to H. All right, and this J, because these companies are normally governed by other regulators. I repeat, these companies are normally governed by other regulators. So I just wanted you to see that list. So there is one hint that if the company is governed by other regulator, it may be performing functions like NBFC, but if it is governed by other regulator, then it is there in the exemption list. But then there are some more companies which are actually NBFCs governed by RBI, but still they are exempted from obtaining registration under RBI. All right? I will talk about that, don't worry. Give me some time. This is not a revision video or something. This is a very detailed video on audit of NBFC, a proper lecture on audit of NBFC where I will be reconciling with the ICM module and everything. So the speed is going to be little on the slower slide. Okay, we go back. So tell me, what have you understood up till now? You have understood the definition of NBFC, financial institution, which is a company. Then non-banking financial company which has principal business of accepting deposits, lending, advances, and any other company as specified by the central government in consultation with RBI in the official gazette notification. But then to find out which company is NBFC, they have given a very clear 50-50 rule. If the financial assets are more than 50% of the total assets, and if the income from financial assets is more than 50% of the total income, in that case, all right, this such companies will be treated as NBFC. In this total assets, you will have to net it off by intangible assets. Very good. All right, so please select your numerator and denominator properly. All right. Okay, just a minute. And then we discussed that which companies are exempt from obtaining registration under RBI. That list is still pending. I will talk more about that list. All right. Okay. Now everyone, look at this registration mandatory under RBI and list of exempted companies. So if you fall under the definition, I repeat, simple rule. If you fall under the definition and if you are not covered by the exemption list, I repeat, if you fall under the definition and if you are not covered by exemption list, then in that case, you will have to obtain registration certificate from RBI. There is a requirement of minimum net owned funds. That requirement is rupees 2 crores. Net owned funds, which is very much similar to your shareholders funds. All right. So there is a requirement that it should be at least rupees 2 crores if you want to, obtain the registration from RBI. All right. That is the entry point. Minimum net owned funds of rupees 2 crores. If you are not maintaining this, all right, then you will not get the registration. If you have been given the registration, but after that, if you are not maintaining it, then your registration will be cancelled. Students, what I am going to say now, probably no professor says, all right, at final C level. But in your inter-CA accounts module, all right, in your inter-CA accounts module, advanced accounts module, there is one sum on net owned funds. Okay, minimum net owned funds. So what I want you to do is, obviously I'm not discussing everything about minimum net owned funds over here. I'm not expecting that in the paper, but just to be safe, for the students who are preparing other topics on an average manner, like some students don't prepare standards and stuff properly, then in these topics you should be an expert, correct? So you can just take a screenshot of this owned fund and net owned fund, okay? And then you can also take a screenshot of this illustration 1 over here. This is owned fund, and illustration 2, which is net owned fund. Okay, so you can also just take a screenshot of this particular sum. No, I'm not going to promise within 20 minutes we'll be done with audit of NBFC. That is another video where we talk about revision videos and stuff. This is a very detailed video on the discussion of audit of NBFC. So whatever I want to tell in my regular course, everything is going to be a part of this video. All right. Now everyone over here, if there is any confusion, you can always have a discussion with me, doubt solving for owned funds, net owned funds. But if you just go through the screenshots that you have just taken, all right, then in that case, I don't feel that there is going to be any issue. Okay. But this chapter is very interesting, audit of NBFC. It's a small topic, but a very interesting one. Now, let us come to this types of NBFC. Okay. Sir, exemption requirement pending. Sir, you have not taught some list of companies over here. I'll come to that. But for that, I need to discuss types of NBFC. Okay. Now listen to me. The existing classification of types of NBFC is based upon whether NBFC is accepting deposits or not. Liability based classification. Be careful, there are some changes over here. The amendments which were printed in May 23 RTP. I mean the amendment PDF. Then there is another way of classifying NBFC, that is assessed based classification based upon the total asset size. Okay. And then there is an activity based classification based upon the core activity. See, when you are a single person, all right, you are called as son or daughter by your parents. You are called as student by your teacher. All right. You are called as hubby chubby shona muna by your near and dear ones. Similarly, one particular NBFC needs to be classified from three angles. First, whether it is accepting public deposits or not. Second, right, what is the total asset size? And third, the activity based, what is the core area of activity? All right. So one NBFC needs to be measured from three angles: liability, asset, and activity. Okay. Okay. Just a minute. So first one, category one. So if you are accepting deposits, correct, then they will call you as NBFCD, that you are accepting deposits. All right. Now just checking in the software that the recording is going on properly. So NBFCD. Then if you are not accepting deposits, then NBFC ND. Sir, but who will decide? RBI will giving you the registration. All right. They will say it very clearly whether you are NBFC D or NBFC ND. Most of the NBFCs in our country are NBFC NDs. Very few NBFCs, all right, maybe around 10% of total NBFCs or even less than that are accepting deposits. Okay. Because normally there are restrictions on NBFCs for accepting deposits. Then asset based. If your total asset size, I repeat, if your total asset size is 500 crores or more, then you are called as systemically important NBFC. If your total asset size is 500 crore or more as per last audited balance sheet, then you are called as systemically important NBFCs. All right. And if your total asset size is less than 100 crore, then you are called as non-systemically important NBFCs. I'm intentionally going slow so that the technical details are very clear. All right. So when I say NBFC SI means you are systemically important. When I say NBFC NSI means you are non-systemically important. Okay. Okay. Come on, just practice with me. If I say NBFC D, then you are accepting deposits. If I say NBFC ND, not accepting deposits. SI, not accepting deposits but systemically important. So if I say NBFC ND SI, so you are not accepting deposits but systemically important. If I say NBFC ND NSI, means you are not accepting deposits and you are not even systemically important. Yes sir, yes sir. Okay. Then activity based NBFCs. So all NBFCs will be doing some or the other activity. All right. So do you understand that every activity based NBFC would be either accepting deposits or not accepting deposits? would be either systemically important or non-systemically important. So I would say like this, that the whole name of NBFC, the whole operation of NBFC is based upon these three parameters: whether you're accepting deposits or not, what is your total asset size, and what is your activity. All right. Okay. So everyone over here, what I have done is I have given a little overview of the activities. Okay. Activity based NBFCs, I have given overview. I got this from RBI circular only. But this is just an overview, a super summary. Okay. Because if you go to the module in audit of NBFCs, and when we go to activity based NBFCs, these are just some of my markings during the lectures, just when I tally the provisions. Okay. So when you go to activity based NBFCs, what we see is just the list over here. That's it. Okay. So they have not given description of every single NBFC. If they would have done that, then the discussion will run into 4 or 5 pages or so, all right, or even more than that. Okay. So they have not given description of every single NBFC. Understood? Yes. So that is why what I did is over here I just wrote in short what is the activity. However, if you are interested in knowing every single activity of that NBFC, all right, you have all the time on Mother Earth. Then in Inter CA Advanced Accounts module, okay, you will find this, that every single NBFC with for every single activity, what are the terms and conditions given by RBI, everything is given in your Inter CA Advanced Accounts module. My recommendation, you are not supposed to buy hard this. All right. Even if you are a regular course student, fast track course student, because my NBFC video is same for everyone, because you have to go into certain details. It's so technical chapter that you can't cut down anything over there. All right. So you are not supposed to buy hard this. Okay. This is just for the students who want to go through it. But it could be a very good realization that you had this in your Inter-CA level and were you aware about it. Okay. Now everyone over here, let me just explain in short every single NBFC over here, because this will be required in the when we go ahead in our topics. All right. So first, investment and credit company, ICC. All right. Investment and credit company. Most of the NBFCs are investment and credit company because their main task is lending and investment. Okay, that is their main task. Then look at this, NBFC, IFC, infrastructure finance companies. Okay. These NBFCs are purely into infrastructure loans. Okay. There are certain criteria, but you don't have to get into detail. NBFC, systemically important core investment company. Okay. Now everyone, this core investment company, all right, core investment company, we need to understand this. Which company is called as a core investment company? Core investment company is the company which has its major investments into a particular group of companies. Like let us say that I am an NBFC and my major investments, around 90% of investments are into Reliance Group. I'm not just an investment company, I'm a core investment company. That means, all right, majority of my activities are into a particular group. So I am a core investment company. Am I clear with this? Yes, sir. Now, why do you need to know about core investment company? Everyone over here. Yes, I will go ultra slow on this because this is very important. It was asked in November 22 attempt also. And I was shocked to see that students did not attempt it. Even if you see my NBFC revision video for November 22, there also I had said that this is going to be extremely important for your exams. All right. Okay. So look at this. Core investment company. Now, if you are a core investment company, that means your majority of the funds are used for investing in a particular group. All right. Then in that case, if your asset size is less than 100 crores, so you are a CIC with asset size less than 100 crore, you are exempt from registration. You are exempt from the requirement of certificate of registration. Or let us say if you are a CIC with asset size of 100 crore and above, but not accessing public funds. All right. So you are a CIC with asset size of greater than equal to rupees 100 crores, but not accessing public funds. then in that case also you are exempt from certificate of registration. Just focus on this core investment companies. There are some more exemptions which I want to explain from certificate of registration. I will come to that. But this is a very important point for Caro 2020, because on Caro 2020, if you just check out clause 16 of Caro, you will see this. All right, they are questioning on this, whether the company, whether the group has one CIC or more than one CIC, because normally Adani, Ambani, Tatas, all right, they will have one CIC in their group. All right, and that particular company will be investing into the securities of that particular group itself. Okay, so everyone, let us come back. So NBFC, systemically important CIC. Well, systemically important is just based upon the asset size. Okay, activity based. Then infrastructure debt fund. Here we are just understanding different types of NBFCs. Activity based. Infrastructure debt fund. So what is the difference between infrastructure finance company and infrastructure debt fund? Infrastructure finance company will be majorly into infrastructure loans, whereas infrastructure debt fund, all right, will work for big infrastructure companies. Let us say, for example, L&T is an infrastructure company, all right, which is into various infra projects. Now, obviously, L&T needs some funds. So I will open IDF NBFC, Infrastructure Debt Fund NBFC, whereby long-term bonds, all right, long-term bonds will be issued. Normally, these bonds are with maturity of running up to 5 years or so. So long-term bonds will be issued, all right, and public can subscribe it, and then the money of the public is locked in this IDF NBFC. Then this IDF NBFC will flow the money into infrastructure projects, all right. But whenever you want to issue debt instruments and get the funds, then you have to create a separate entity, correct? So that is why this IDF NBFC. IDF NBFC is created by an infrastructure finance company only, right? Okay. NBFC, microfinance institution. Credit to economically disadvantaged groups. So they have defined, RBI has defined based upon the income level of a person, that which companies or which entities or proprietors, small businesses will come into EDG, economically disadvantaged groups. All right. And if a particular NBFC's major business, all right, is into giving loans into economically disadvantaged groups, all right, then that is NBFC, microfinance institution. Okay. Then we have NBFC factor. What is factoring business? I will purchase your trade receivable at a discounted price. All right. You have heard about this factoring business. You would have solved sums of factoring into foundation or so maybe. So I will just buy your trade receivables at a discounted price. Then I will recover money from the trade receivables and I'm going to earn from that. That is NBFC factoring, acquisition of receivables. Okay. Then we have NOFHC, non-operative financial holding company. I will just draw a diagram for you to understand what is a NOFHC, non-operative financial holding company. So let us say we have Reliance promoters, Ambani's. Let us say they want to float a bank, Reliance Bank. I think that is the only thing pending now. Okay, so they will lock their funds into a particular NOFHC, non-operative financial holding company. The purpose of this company will be not to operate on its own, just to lock the fund of the promoters, and through this company they will invest in Reliance Bank. Okay, look at the name, non-operative, just created for holding. So non-operative financial holding company. I repeat, non-operative financial holding company. All right. So everyone over here, non-operative financial holding company, facilitation of promoter or promoter group in setting up new banks. That is why it has been created. Okay. Then we have mortgage guarantee company. What is this mortgage guarantee company? Mortgage guarantee companies will provide guarantee that higher amount of money can be recovered from this mortgage. If you fail to recover this money, we will pay for it. Don't worry. So normally, let us say if I want to mortgage my house with the bank, all right, then bank says that your house is of 1.5 crores. We will give you 70 lakh rupees loan. I said, come on, yeah, at least give me 1 CR loan. Then now mortgage guarantee company will come into picture. Mortgage guarantee company will give the guarantee to the bank, right? That don't worry, you can give Pragnesh 1 crore rupees loan. For that extra 30 lakh rupees which you were not ready to give, we give a guarantee. So mortgage guarantee companies, they guarantee the recovery from the assets mortgaged, and for that they charge some commission, all right, for providing this particular guarantee. Yes, sir. Okay. Then we have NBFC, account aggregator. So collecting and providing information about a customer's financial assets in a consolidated, organized, retrievable manner to the customer or others as specified by the customer. So account aggregator, okay, will just provide you the details of your accounts which you are holding in various banks. All right. So this NBFC will just act as an account aggregator. Normally you see these UPI apps, all right. So normally either they are payment banks, all right, or they would be getting this NBFC account aggregator tag, where they themselves will not hold any account of that particular, particular customer, but they will act as account aggregators, all right, and you can operate through that app. Okay. Then everyone over here, NBFC peer-to-peer lending platform. What is this peer-to-peer lending platform? Basically, it will create a platform where the lenders and borrowers can come together and they can mobilize the fund. For example, if I want to lend it, all right, to NBFCs or maybe to the borrowers, and the borrowers are there to accept the money, so NBFC will arrange the platform for us, right? And we can transact on that platform. For that, NBFC will obviously charge some commission. Housing finance companies finance for housing, all right, but obviously the companies which are not governed by National Housing Bank. Okay. So source is RBI circular. I've printed over here. They had nicely summarized it. But if you want to see detailed classification of activity based NBFCs, then it is in the inter-CA module. Yes sir, yes sir, yes sir. Now listen to me very, very carefully. Need to see this very, very clearly. RBI has introduced something called as scale based regulation. What is this scale based regulation? Fourth way of introducing the NBFC. So if I am NBFC, first I need to tell you whether I am accepting deposits or not, liability based. Second, I need to tell you whether I am systemically important or not, asset based upon my asset size, whether it is 500 crores or more. Then I need to tell you my activity, which I just explained right now. And now I need to tell you my layer. Sir, my layer sounds so bad. Array, look at this. Base layer, middle layer, upper layer, top layer. All right. So everyone over here, allow me to explain what is this. Okay. So they have given some classification by which they are classifying NBFC into levels, but we will not use the word levels, we will use their word, that is layer. All right. Base layer, middle layer, upper layer, top layer. Based upon that, RBI plans to change lots of things in their regulations. All right. They have already started amending the regulations. Maybe in the next couple of years we will see much more and more amendments. All right. So this is the start of lots of changes in NBFC industry. Now listen to me. With this amendment, whatever you have discussed earlier, will it change? No. I'm telling you, it is just fourth way of introducing NBFC. First, accepting deposits or not. Second, systemically important or not. Third, what is your activity? What is your activity? And fourth now, all right, tell me your layer, whether you fall into which layer. Now let me explain it very, very clearly. First is the base layer. Just by heart one line. Non-deposit taking NBFCs whose asset size is below rupees 1000 crore. So it is very much possible that there is one non-deposit taking NBFC systemically important but falling into base layer. So never mix these things. Every single point you should analyze properly. Liability based, not accepting deposits. 600 crore, let us say, if this is the asset size, for example. Okay, systemically important. What is the activity? Okay, into infrastructure. All right. Now, what is the layer? All right, base layer. Oh, wait. That is where we will need to focus more. Because if you just by heart one line, then it is not complete understanding. Now here, if you hear me out for the next 5-7 minutes properly, you will be completely out of any sort of confusion. All right. So everyone over here, you will be in the base layer if your asset size is less than rupees 1000 crore plus you are not accepting deposits. And they have given some activities over here. These four NBFCs, I repeat, these four NBFCs will always be in the base layer. Sir, how come you are so sure about this? What if these NBFCs, what if they have their asset size as 1100 crores on it? Because here they have given asset size of less than 1000 crores. Let me tell you, these NBFCs will not have asset size of 1100 crores here. Just look at them, just look at their functions. All right, why will NBFC of 1100 1200 crores function for only these activities? All right, I've already explained peer-to-peer lending, account aggregator, non-operative financial holding company who will hold 1200 crore rupees assets in a nano FHC. All right, and then not availing public funds, not having any customer interface. All right, but let us say that you have that doubt that these NBFCs, what if their asset size is 1100 crore? Then RBI, if we just look into the amendments printed in your amendment PDF, RBI has clearly said that NBFC peer to peer, NBFC account aggregator, non-operative financial holding company, and NBFCs without public funds and customer interface will always remain in the base layer of the regulatory structure. This line has been given in the RBI scale-based regulations. So tell me, students, in exam, if at all I put up this question will not come. Obviously this classification is important, but what I'm trying to say will not come, but then you may have this doubt, correct? So if I say there is NBFC peer to peer, it is just a platform. Why will they develop assets of, total asset size of 1100, 1200 crore? But let us say NBFC peer to peer with asset size of 1100 crores. All right, then what to do? Classify it under base layer. Okay, so sir, can we then conclude that these NBFCs, okay, will always be in the base layer? Yes. Plus, the NBFCs not accepting deposits and whose asset size is less than 1000 crore will always be in the base layer. Almost yes. Let me also explain middle layer. Acha, one thing is very clear that these four NBFCs will always be in the base layer. Chalo. We will talk more about the first point later on. Let us come to the middle layer. First, let me show you one line. In the amendments, they have printed RBI's, only basics of RBI circular. So look at this. NBFC D, deposit taking, core investment company, infrastructure finance company, housing finance company will always be in the middle layer or upper layer. That these companies will never be in the base layer. That means, chalo, NBFC D to understood, it is accepting deposits. That means even if these companies, I repeat, even if these companies are not accepting deposits and if their asset size is less than rupees 1000 crore, still they will always be in the middle layer. So what is upper layer? I'll talk about that, but they will not be in the base layer, that is for sure. So I repeat, NBFC D, NBFC CIC, IFC, infrastructure finance company, housing finance company will never be in the base layer. Can be in middle or upper. I will explain that. Don't worry. Trust me, hear me out for next 10 minutes. All your confusion will be gone. I will also take your small test. All right. Then they have given more companies. Look at this in the middle layer. Standalone primary dealers. So what is standalone primary dealers? Basically, these are individual primary dealers, corporates, who are not banks, but they have access to all the markets. That means even government securities and stuff. So these are standalone primary dealers. Okay, they have access to all the securities market. Then look at this. What they are trying to say is SPD and IDF NBFC will always remain in middle layer. Okay, so everyone over here. Standalone primary dealers. Hear me out for next 5-10 minutes. You will be very clear. Don't worry about it. Standalone primary dealers, infrastructure debt fund, NBFCs. These two will always be in the middle layer. Always. Okay, so tell me the NBFCs whose layers have been fixed. Forget about asset size and everything. All right. Tell me the NBFCs whose layers have been fixed. That means you don't have to think even twice for it. Okay. NBFC P2P, AA, NOFHC, not accessing public funds and not having customer interface. Dash the asset size and everything. All right. These four NBFCs will always be in the base layer. Correct? Okay. Then over here, these two NBFCs, standalone primary dealers and IDF NBFC, will always be in the middle layer. This much, only this much are you clear with? Alright, don't worry. Now listen to me. Let me explain upper layer for 2 minutes. Okay. Upper layer is the NBFCs based upon the asset size. The top 10 NBFCs, alright, as per the asset size in this country, top 10 NBFCs as per the asset size will get into upper layer. Now tell me everyone, if you are accepting deposits, for sure you are not in base layer. Correct? But you can either be in middle or upper, because NBFCs accepting deposits are huge. So what if you are into top 10 as per asset size? Now do you understand logic why they said that NBFCs accepting deposits, CIC, HFC, IFC can either be in the middle or upper layer, because these are normally big companies, right? So there is a capacity that these companies could be in the top 10 as per the asset size. Okay, that is why they said that. And any other NBFC which is not accepting deposits and asset size is 1000 crore and above will always be in the middle layer. Sir, there is too much of confusion. Yes, I know that. But only after 5-7 minutes I can clear your confusion. Now those 5-7 minutes are over. Okay? So if you are still looking at the lecture, then I'm very happy that you are surviving. Okay. Now listen to me very, very carefully. One time it is better to get confused, right? So that I can solve the confusion. Test. NBFC P2P. Always in base layer. NBFC account aggregator, base layer. Base layer. NOFHA, base layer. Not accessing public funds, not having any customer interface, base layer. Sir, what if these NBFCs get into top 10 as per asset size? See, there is something called as, what if I become Sachin Tendulkar? Chalo, right? Yeah, some common sense needs to prevail. These NBFCs, how can they get into top 10 as per the asset size? All right, look, they do not have this huge assets. Yeah, these are normally small NBFCs. Okay, so they will always remain in the base layer. Okay, okay. NBFC accepting deposits will never be in the base layer, could be in the middle layer or upper layer. Upper layer is top 10. Sir, then what is top layer? Nothing. Top layer is nothing, forget it. Right? Upper layer is top 10 NBFCs as per the asset size. Okay, so it will never be in the base layer, could be in middle layer or upper layer. Go slow. Standalone primary dealers infrastructure debt fund will always be in the middle layer, will never be in the base layer, will also not get into upper layer. All right, okay. Then these three can either be in the middle layer or upper layer. Upper layer is very simple, na? Top 10 asset size. All right, top 10 NBFCs as per their asset size. Then if there is any other NBFC not accepting deposits, normally this investment and credit company, right? The general category of NBFCs, right? Normally 80-85% NBFCs, they have a general business of investments and loan, right? So NBFCs, ICC, investment and credit companies could be either accepting deposit, not accepting deposits. But if they are not accepting deposits, all right, and their asset size is greater than equal to rupees 1000 crore, then you will be in the middle layer. Then you will be in the middle layer. But I can't ask students to just by heart this. Otherwise, it would have been so simple. Non-deposit taking, asset size less than 1000 crore. All right, you will be in the base layer. Non-deposit taking, asset size 1000 crore or more, you will be in the middle layer. Okay? Then, beta, if you are accepting deposits, you will be in the middle layer. Top 10 NBFCs as per the asset size will be in the upper layer. It is not that simple. You know, some people are trying to say this in the explanation. It is not that simple. RBI has said very clearly that P2P, AA, NOF, SCSC and NBFCs with not accessing public funds and not having a customer interface will always remain in the base layer. So I cannot give you a very simple classification. Otherwise it will be like fooling you. Alright. So let us spend 2 more minutes. These are amendments expected in the exams. Come on everyone. Come on. Alright. So NBFC, P2P, P2P, AA, NOFHC, not accessing public funds, not having any customer interface, always in the base layer. All right. Once I say accepting deposits, in the middle layer. Upper layer is so simple, top 10 NBFCs as per asset size. All right. But once I say accepting deposits, even if their asset size is 200 crores, all right, still it will always be in the middle layer. But if it is into top 10, then it may go into upper layer. All right. Then SPD, IDF, NBFC. SPD, IDF, NBFC always in middle layer. CIC, HFC, IFC is either middle or upper. All right. And not accepting deposits, asset size greater than equal to rupees 1000 crore will be in the middle layer. All right. And upper layer is just top 10 NBFCs as per their asset size. Okay. But whatever has been explained, please don't forget that. Top layer currently is empty. In future, if RBI wants to define it, they may define it. So don't worry about the top layer. All right. Always worry about the base layer, middle layer, upper layer. All right. Everyone over here. Okay. This is just a common note now. These NBFCs could lie in any of the layers based upon the size. All right. Ignore that note. It is fine. Okay. I think you have understood that, because these NBFCs were not specifically discussed in the layers. So they are saying that please look at their asset size and then determine it. Okay. If they are accepting deposits, then middle layer. Not accepting deposits. So that not accepting deposits wala jo numerical limit hai na, it is for actually these NBFCs, because they were not discussed in any layer. No, correct? So if these NBFCs are accepting deposits, then we'll get into middle layer. If they are into top 10 as per asset size, we'll get into upper layer. If they are not accepting deposits, asset size less than 1000 crore, will get into base layer. Not accepting deposits, asset size greater than equal to 1000 crore, will get into middle layer. Right? You can just keep on testing yourself. Best also download my app. I'm going to release MCQs on this particular layer. All right. So if you practice 20-30 MCQs, you will be much more relieved. All right. Okay. Now everyone over here. Government owned NBFCs, I repeat, government owned NBFCs will always be in the base layer or middle layer, as the case may be. They will never be placed in the upper layer, because upper layer is going to be very strictly regulated by RBI. Then this note 3 is what I'll tell you. Listen, in earlier RBI circulars before October 2021, because those circulars are still there. So they used to define the applicability of any point based upon, okay, if you are NBFC ND, then you are going to follow this. If you are NBFC SI, then you're going to follow this. All right. Then they have just said that you can actually ignore this note. All right. But this is just for knowledge, that wherever we have written ND in till date, in whichever circular we have written non-accepting deposits, it will mean base layer. This is just they are trying to complicate. And wherever we have written D, it will be middle or upper layer. And wherever we have written NDSI, it could be middle layer, upper layer. It could also be base layer if the asset size is less than 1000 crore. But relax. I can understand you are getting confused. Ignore this note. All right. So ICI, what they have done, they have just printed few points. If they would have printed whole RBI circular, then it would have been more clear. But then it would have been too much for you. All right. It will turn out to be more than professional ethics also then. Acha, can we do a quick revision, please? Can we do a quick revision? I know it was confusing. Many professors are going to explain in simplified form and may hide some details from you. But I need to tell you very clearly, correct? So I know it is confusing, but we can't compromise. Chalo, without looking at the book now. NBFC is accepting deposits. Will never be base layer. Could be middle layer, upper layer. Very good. NBFC peer-to-peer account aggregator, NOFHC, not accessing public funds without any customer interface, always in the base layer. Forget about everything else, always in the base layer. Very good. NBFC standalone primary dealers, IDF, NBFC, always in the middle layer. All right. Acha, NBFC infrastructure finance company, core investment company, housing finance company, never in the base layer, could be in the middle or upper layer. Very good. Acha, investment credit company, NBFC, ICC, MGC, MFI. Sir, if they are accepting deposits, middle layer. If they are middle or upper, if they are not accepting deposits, all right. If they are not accepting deposits, asset size less than 1000 crore, base layer. If they are not accepting deposits, asset size 1000 crore or more, will be in the middle layer. All right. If they get into top 10 asset sizes, then they could go into upper layer. Super, super. Government owned NBFCs never in the upper layer, could be in the middle or base layer. Wow, 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 wow. Super, super. All right. So everyone, please ensure that you are doing this properly. If at all you think that you want to counter me or you want to say something more, then you can type it in the comment section of this particular video. I'm coming out with this video on YouTube to have a healthy discussion with you. But let me tell you, I'm teaching as per the ICM module. Okay. There are lots of points in the module that need to change because I've gone through the circulars of RBI. All right. Okay. Now everyone over here. From fourth point onwards, nothing changes. From fourth point onwards, I repeat, nothing changes when it comes to NBFCs. Okay. So from fourth point onwards, just recently I took one batch. All right. I will just attach that particular video and you can go through it because nothing changes. All right. Everything will be explained properly. Okay. So as I told you, nothing changes over here from the fourth point onwards. But just what we'll do is, now we need to be confident that up till now we are at least done with all the technical points. Please come back to the registration. Companies exempted from registration. So all such companies which were acting like NBFs, which are acting like NBFCs but governed by other regulators are exempt. Then core investment company, all right, with asset size of less than 100 crore, exempt from registration. Asset size greater than equal to 100 crore but not accessing public funds, exempt from registration. Then alternative investment fund companies. Sir, these companies are high net worth individuals are handled by these companies, all right, and they will obviously handle your investments into words of thousands and hundreds of crores, all right, and basically these companies are exempt from RBI registration because it is given under your exemption list. There are lots of regulations for these companies but not a certificate of registration from RBI, all right. Then microfinance companies are into financing of very small borrowers as per their income. So that is microfinance companies. You want to see more details, I told you it is there in your inter-CA advanced accounts module. All right. So I hope I've explained. Mortgage guarantee companies, so I think I explained you in the activity only. So even these companies are exempt. So please by heart these companies list which are exempt from certificate of registration, because it is going to be very helpful in answering your module questions, and especially clause 16 of CARO 2020. All right. So up till now I am done with the discussion of definition of NBFC. In that we discussed 50-50 rule also. We discussed registration requirement. We saw net owned fund. Yeah, we saw list of companies which are exempted from registration. But for that we had to do types of NBFCs: liability based, asset based, activity based, and then now layer based. All right, scale based regulations. Correct. So now from the balance, for the balance points, what I will do is, as I told you, I will just upload the video, all right, which recently I took in a particular batch. There were good amount of discussions and you can go through it. Thank you so much. Differences between banks and NBFC. What is the difference between bank and NBFC? See, banks can accept deposits from the public, correct? NBFCs are not allowed to accept these demand deposits, and most of the NBFCs are not allowed to accept deposits from public. Few NBFCs have been allowed. Otherwise, most of the NBFCs are not allowed to accept deposits from public. So NBFCs cannot accept demand deposits. You can't have a current account, saving account with NBFCs. All right. However, some NBFCs can accept term deposits. So let me tell you, demand deposits, no NBFC can accept. Huh? And even for term deposits, like long-term deposits, correct? Only a few NBFCs have been allowed to accept deposits from the public. Understood this? And there is, RBI basically checks their liquidity and accordingly they allow them. But demand deposits, so no NBFC can accept, whereas banks can always accept that. Settlements. NBFCs do not form part of payment and settlement system and cannot issue checks from itself. Have you seen checkbook of NBFC? Have you ever seen checkbook of an NBFC? No. Next, DICGC. Deposit Insurance and Credit Guarantee Corporation. I hope that you are aware about this DICGC. It gives you a minimum guarantee of some amount if you have an amount with the bank. If you have an amount with the bank, all right. And it is not available to depositors of NBFCs. That is why when if you get a chance, you should go for a long-term deposit with NBFC. You should keep it over there. Currently, I have some amounts with the NBFCs that I've kept as long-term deposits with them. Right? They give me an interest rate of 9.5 or 10%. Right? It is better. That is why they give a higher interest rate, no, because it is a risky deposit that you keep it with them. All right. Next, 4.4 priority sector lending. What is this priority sector lending? Banks have been asked by RBI to lend some minimum specific amount to some specific sectors like agriculture, like education, like rural sector. That is called as priority sector lending. Priority sector lending circular does not apply to NBFC. No minimum exposure to priority sector required by NBFC. Now, let us come to this point, fifth point. Prudential norms, capital requirements. Yes, I want everyone to stay focused over here. Now, let me just show it from here also. Yes, prudential norms, capital requirements. What is first of all prudential norms? RBI guidelines, mandatory thing to be followed. But why they are named as prudential norms? Correct? Because these are the guidelines which talk about income, asset, and capital. All right, income, asset, and capital. Now, these are the areas where we are supposed to maintain our prudence. All right, that is why they are called as prudential norms. Otherwise, this is nothing but RBI guidelines to be mandatorily followed. So, if you get something like this, please explain the prudential norms with respect to NBFC capital requirements. Then don't break your head over there. Prudential norms, hey, we don't know what are these norms. What are these prudential norms? Basically, RBI guidelines which are mandating minimum capital to be maintained by NBFC. First of all, do you remember? Now I will need your knowledge of audit of banks. For the students who haven't attended audit of banks, bye-bye. Your lecture is over. Okay. So, do you remember in audit of banks, I discussed minimum capital to be maintained by the bank? Yes. Minimum capital to be maintained by the bank. I will kill you now. So, capital risk adequacy ratio based upon their risk weighted assets. Yes, the minimum capital to be maintained by them. Yes. Similarly, even NBFC has to maintain some minimum capital. And that is given in this circular. Master directions, basically RBI guidelines. They call that master directions. NBFC, systemically important, non-deposit taking company and deposit taking company directions 2016. Now, whatever I am going to discuss is for two NBFCs only. One is NBFC D, deposit taking, and NBFC SI ND. That means even though the NBFC is not taking deposit, but if it is systemically important, it tell me something. Can I say these are the only two NBFCs which can have a big impact on the economy? Yes or no, sir? One, if you are accepting deposits from the public. Second, you are not accepting deposits, but your asset size is 500 crores or more. So obviously, you are systemically important. So can I say these are the two categories of NBFCs which will actually have some impact on the economy? Yes or no, sir? Yes, sir. And RBI is worried about these two NBFCs more than any other NBFC. I need to set this base, otherwise you will never understand what we are discussing. So continuously you will keep on finding this word now, every applicable NBFC, applicable NBFC, applicable NBFC. All right. In the earlier module, they had not defined only what is applicable NBFC. Then I had to do this. I had to pick it up from RBI guidelines. I had put it over here. That is why this is printed in bold, because this in the recent module they have now included this. Anyways, my textbook already had an explanation of what is applicable NBFC. So they printed everything: applicable NBFC, applicable NBFC, applicable. But which NBFC is applicable, that was not given. All right. So they are worried about two NBFCs, NBFC D and NBFC, systemically important but not accepting deposits. Correct. Because these two can have an impact on the economy. Correct. Now over here. All right. So for them, all of these percentages and limits have been given. So everyone over here, every applicable NBFC, I have defined NBFC ND, SI and NBFC D. They are worried about this. As defined in RBI Master Directions 2016, you may not remember the whole name of the circular, shall maintain a minimum capital ratio consisting of tier 1 and tier 2 capital, which shall not be less than 15% of its aggregated risk-weighted assets on balance sheet and of risk-adjusted value of off-balance sheet items. So the only thing that has changed from audit of banks over here is the percentage. Correct? Can I say that in bank or bank, how much percent was there? Minimum capital risk adequacy ratio. How much it was? 9%. 9%. Yes. And when it comes to NBFC, it has gone to 15%. Be careful. These are the areas that can confuse you in the exams. All right. So now this is not required, because I told you what is applicable NBFC. One thing is very clear that they are not worried too much about NBFC, NSI, ND. Non-systemically important and not accepting deposits. The minor impact on economy, they are not worried too much about them. But over here, they want them to keep a minimum capital of this much. All right. Okay. Now, again, revising that concept of minimum capital. Before I go ahead, I showed you in the module also of audit of banks that they had not given that for which asset how much weight is prescribed by RBI. Correct. But in NBFC, when we go to the module, the risk-weighted asset shall be calculated as the weighted aggregated of funded items as detailed here under. They have prescribed the weights over here. They have given the weightage. Now again, for the last time, I'm revising this. So you will have to multiply the assets into the risk weightage. And what you will get is RWA, risk weighted assets, correct? And then whatever are the assets, 1, 2, 3, 4, then whatever is the weightage, 50%, 100%, 200%, 100%. All right. You multiply and whatever product you get, X, Y, Z, A. So summation of this X plus Y plus Z plus A. This will be your total risk weighted assets, and based upon this 15% should be your minimum capital. Correct? So they have given the weightage. My God. Are you going to buy hard this full weightage? No. We will just go through this. All right. So cash and bank balance. Do I need to teach you that for cash and bank balance, the weightage is 0? Obviously not, because there is no risk. Yeah, it is there with the NBFC. Correct. So obviously there is no risk over there. Let us see where they have given 0. Investments into approved securities. Okay. Except C above. What are these approved securities? Mostly these are government securities. Correct. Then again, after this whole list, they have not given what is this approved securities and stuff. ऐसे print कर दिया RBI circular से बोला मजा आएगा. But these approved securities are mostly these government securities where the risk is almost 0 because it is sovereign guarantee. So there, except at C below. Fixed deposits or certificates of deposits, bonds of public financial institution, there it is 100. Bonds of public sector bank, 20% risk. Public sector bank. Public sector bank. If you have bonds of these banks, it's not running too much risk, right? So even if NBFC has bonds of 100 crore, but when I multiply the asset by this risk, can I say they will be considered as 20 crore? Yes or no, sir? Yes, sir. Yes, sir. All right. So based upon the risk, we focus on 100 and focus on 0. All right. So 0, no risk. Here, no risk. Where is 100? Okay. Then shares of all companies and debentures, bonds, commercial papers, units of all mutual fund, 100. All right. Focus on 100. Stock on higher current assets, stock on higher net book value, 100. Then intercorporate loans and deposits, 100. 0, 0. Focus on 0. Loans and that means he's asking us to focus on everything only. No. See, there are some percentages which I'm not asking you to focus upon. No, so loans and advances fully secured against the deposits held. Wait, if I have secured my loan, I am the NBFC, I gave you loan to you, and you also have deposits with me, so I can set it off at any point of time. It is fully secured. 0. Loans to staff, yeah, I'm going to give them salary, from that I'm going to recover. So over there, 0. Other secured loans and advances considered good. All right. except at 6 below 100. Bills purchased discounted 100, others to be specified 100. So tell me, what are they doing over here? Zero they have given for loans and advances fully secured and loans to staff. Others are mostly 100, 100, 100, 100, 100 over here. All right. Okay. Again, that alignment is not proper. Next, fixed assets, net of depreciation over there, 100, 100, 100, not a problem. Other assets, income tax deducted at source, all right, zero. Advance tax paid, interest due on government securities, all of these are not risky, held with the government, so not risky at all. Others to be specified will by default carry 100. Means whatever is others in that other assets. Domestic sovereign guarantee, when things are backed by sovereign guarantee, that is central government guarantee, normally it will be 0, 0, 0. Here the risky thing is where they have given 20. All right. So look at this, central government, funds based claim on the central government, fund based claim on the central government, 0. Fine. Direct loan, credit, overdraft exposure and investment is state government securities. Wow, this is something to be noted. State government securities also 0. All right. State, so they, because if it is state government securities, if the state defaults, finally it is the central government who will have to pay you the money, correct? So if it is into state government securities, that is why it is also sovereign guarantee. Central government guaranteed claims, 0. State government guaranteed claims which have not remained in default, which are in default for a period of not more than 90 days. 20 either print 20. All right. So which are in default for a period of not more than 90 days or which have not been defaulted. State government guaranteed claims which have either not been defaulted or which have been defaulted but it is not more than 90 days, they are saying 20%. State government guaranteed claims which have remained in default for a period of more than 90 days, 100% risk. Hey, Baba, hey, you understood? No, why are we doing these percentages? To understand the risk involved in that, and we will multiply the assets with the risk weightage. Correct. So I want you to do this thing from the module itself, and that is why I've discussed over here. So please ensure that you are reading this particular table from the module. Yes. So what is the page number? 11.7. 11.7. Then why you haven't printed this? Are in this COVID time, anyways, this list was revised because the risk had increased. Understood this? Then again, they have come back to the normal risk matrix. So, it's better to say few things to refer from the module so that whenever their relevant attempt module comes up, students will see it from there. Correct. Or at least I am going to come out with some notification, but at least you will see it from there so that there is no, disconnect in the discussion. So 11.7 for the risk weights, for the risk weightage. Focus more on 100% and 0%. Here you have to focus more. Yes, sir. Yes, sir. Yes, sir. Or if your just intention is to buy heart, apart from 100 and 0, everything else you can buy heart. Only 3, 2, 3 were there, 20, 50, 20 and stuff. All right. So if you just want to buy heart, apart from 100 and 0, you can buy heart others. All right. The remaining part, because there were only 2, 3 such entries. Correct. And for others, you will just either have to think from 100 angle or 0 angle. 0 is anyways very much clearly evident where there is no risk involved. So what you can do is, if the intention is just to buy heart, then forget about 100 and 0, focus on others, buy hard them. Then apart from that, if anything is asked in the exam, it would be either 100 or 0. 0 is very much easily identifiable where there is no risk. So the balance left is only 100. Am I clear with this? Hello, hey? Yes, sir. Yes, sir. Okay. Now wait, why we were doing this? Assets into risk. The total of risk weighted assets on balance sheet and off balance sheet exposures. Correct. On that total, 15% should be tier 1 and tier 2 capital, minimum capital. Now within this, they have also prescribed how much should be tier 1. All right. The tier 1 capital in respect of applicable NBFCs other than NBFC, microfinance institution and IDF, that is infrastructure debt fund. So forget about them. Chalo. Tier 1 capital in case of applicable NBFCs shall not be less than 10% at any point of time. Oh, so the minimum capital that needs to be maintained tier 1, tier 2, that is 15%. And from that also, 10% should be minimum tier 1. So tell me, hello, is it 10 percentage? I'll give you two options. Let me understand how you are reading this. Is it 10 percentage of the risk weighted assets or 10 percentage of the minimum capital? That should be tier 1. A or B? A or B? Is it 10? I think some students should have joined Hindi batch only. They're not understanding English. I think form में आके they joined English batch, then they realized Hindi is better. If you want to shift into Hindi, let me know. Huh? All right. So A, ego pinch किया तो आया जवाब. 10% of risk weighted assets or 10%, of course it is 10% of risk weighted assets. Everyone over here, when they say that tier 1 capital should not be less than 10%, correct? Percentage is always defined as a percentage of risk weighted assets on balance sheet and of risk adjusted value. Are you getting my point? Yes. So it is 10% of the aggregated risk weighted assets on balance sheet and risk adjusted value of off balance sheet items. All right. So 10% of risk weighted assets. All right. Now we move ahead. Applicable. Now, if someone is thinking what is tier 1 capital, tier 2 capital, this person is not explaining. Only I'd explain that in audit of banks here. Tier 1 capital is your shareholders fund, whereas tier 2 capital is an impure capital like long-term debts and other capital where there are rights of others and it is not 100% available to the company, or it could be some mandatory reserves which is not 100% available to the company, correct? Whereas shareholders funds are 100% available to the company. Applicable NBFCs primarily engaged in lending against gold jewelry. Lending against gold jewelry. If you are into lending against gold jewelry, method finance. Such loans comprising 50% or more of the financial assets shall maintain a minimum tier 1 capital of 12%. My God. So today, when you see your mom or others who are wearing too much of gold in your family, tell them that tier 1 capital 12%. Tier 1 capital 12%. Tier 1 capital 12%. Just look at their gold and say tier 1 capital 12%. All right. It is possible that they will hit you with tires. Forget about tier 1 capital. Done? Yes, yes. See, 3 points, but they will irritate you. That is why I went ultra slow over here. Okay. Go slow. 6th point. Prudential norms. Income recognition and asset provisioning. NPA, you remember that NPA discussion? Yes, bank audit NPA discussion. Yes, sir. All right. Now everyone over here. In case of bank, when is an asset classified as NPA? Sir, general criteria overdue more than 90 days. I'm talking about bank. Huh? Hello, bank. General criteria overdue more than 90 days. And other criteria, we discuss specific criteria for cash credit, agriculture advance, and some other exceptional points we had discussed over there. Now let us understand what in case of NBFC. Everyone over here, if you do not focus on my book, what will happen? Then you will go to the module, and when you go to the module, there are so many discussions over here. Oh. Yes, these 3-4 pages. I have ensured that everything is covered, nothing is missed, and I have ensured that I cover it up in 2 to 3 points. All right. So please look into the book. Otherwise, it will be a very difficult task for you to do it on your own. Okay. So now look at this. 6.3. When an asset is classified as NPA, an asset in respect of which interest has remained overdue for a period of 3 months or more for applicable NBFC. Which NBFC is applicable NBFC? Wait. NBFC D, accepting deposits, and NBFC SI, which is systemically important, even though it may not be accepting deposits. All right. So such NBFCs are treated like banks only. But they are not actually banks. They are treated like banks.
So you will see almost the same NPA norms like banks. 3 months or more for applicable NBFC. However, for NBFC, NSI, ND, all right, that means other NBFCs which are not covered in this applicable NBFCs. That means NBFC not accepting deposit and non-systemically important. For them, it is 6 months or more. Then next, the lease, rental, and hire purchase installment which has become overdue for a period of 3 months or more for applicable NBFC. So applicable NBFC, still that criteria seems to be overdue more than 90 days. But please understand that you have to tick for MCQs 3 months or more. It is similar but overdue more than 90 days. But however, for NBFC, NSI, ND, lease, rental, and hire purchase installments if they are overdue for a period of 12 months or more. Oh, okay. In respect of loans, advances, and other credit facilities, the balance outstanding under the credit facility is made available to same borrower when any of the above credit facility becomes NPA. Basically, for lease, rental, and hire purchase installment, you have this criteria. Otherwise, for all other criteria, it is normal 3 months or more for applicable NBFC, 6 months or more for NBFC, NSI, ND. All right? Yes, yes. Now, some students will still require an understanding that, sir, why is it so that your textbook points are in short and why in module so many paragraphs given? Yeah, please. एक तो इतना जो करा है उतना भी स्टूडेंट करते नहीं है, लेकिन अब मेरे को सब पूछना है कि ऐसा क्यों वैसा क्यों एंड स्टफ, ऑलराइट, पूरा दुनिया का पंचायत करना है मेरे साथ. So everyone over here, in module they have said non-performing asset shall mean how they have drafted. First, an asset in respect of which interest has remained overdue for a period of 6 months or more. You made us write 3 months or more for applicable NBFC. Then after this, they will say, however, RBI came up with NBFC directions 2016. In that, the period of 6 months or more was revised to 3 months or more from 31st March 2018 and thereafter. You are in which year currently? 22, 23, correct? So for you, it is 3 months or more. Are you clear with this? Yes or no, sir? But they have printed the old, then they have said there was an amendment, then they have said this is the point. All this reading has been done by me because you have paid me fees for doing this. Are you getting my point? So then you have the final output with you. Understood? But if you still want to go into detailed reading of the module and stuff, then you can do it. Yeah, detailed reading of module and stuff. Who are these categories of students? I'll tell you. One, who are actually superbly sincere, and that is only 5% or 2-3% of the total students. Otherwise, these students are who have their attempts after 18 months or 24 months. Correct. So they talk about this. So what about the module? What about this? What about that? If you ask a student who has an attempt in the next 6 months or 8 months or 9 months, all right. Hey, sir, this much is enough, no, sir? Anything else to be done, sir? So there are various phases of students. You meet a student of final CA 18 months before the attempt. I'll do everything. Module, the compilers, I'll study every day. And you meet the same student 9 months before. What is to be done? How to cover syllabus? You meet the students 3 months before. Sir, IMP list hai kuch IMP list from where it will be covered. Same student. The way he changes the color, it is worthy to be noted. All right. So if you are actually interested, in doing the module and stuff, then you ask me such questions. Otherwise, please ensure that you are doing this much that has been given to you. All right. Okay. But this is the kind of work that I've done for other chapters to ensure that it is covered in reasonable time. But if you just compare number of my pages with number of module, it is not going to tally. For that, you haven't even paid me fees. All right. You have paid me so that you do it in some reasonable time. Yes. Very good doubt asked by Varshini. Sir, is 3 months and 90 days same? No, they are not the same. Correct. Technically, they are different. But what I said in practical life, overdue more than 90 days, normally this applicable NBFCs will classify them as NPA. But technically for MCQs and stuff, they are different. All right. Done. Fine. Now, everyone, this is the classification when an asset is classified as NPA. Wait. After asset is classified as NPA, there is something called as substandard, doubtful, loss asset. All right. So what was the timeline that we studied in audit of banks? Once asset is classified as NPA, then it moves into which category? Substandard. Remains in substandard category for next 12 months. After that moves into doubtful. Correct. All right. Everyone over here. 6.4. Asset classification. It does not apply to NBFC, MFIs, microfinance institutions. I don't know why they have given this. Microfinance companies, to anyways, they are exempt from the registration requirement only. So how can we apply various RBI guidelines to them? All right. Anyways, look at this. Assets should be classified into standard, substandard, and then further. Look at this substandard. Substandard asset is an asset which has remained NPA for a period not exceeding 12 months. Oh, listen. For applicable NBFCs. But for other NBFCs, it is 18 months. Understood. So if you get a question of if I am the paper setter, I would like to try this one. NBFC, ND, NSI, not accepting deposits and non-systemically important. For them, I am just developing this timeline for NBFC, ND, NSI. So today, if an asset is classified as NPA for NBFC, ND, NSI, again revising, when an asset is classified as NPA for NBFC, ND, NSI, 6 months or more, 6 months or more for normal loans advances, and for lease rental hire purchase, 12 months or more. Correct. Okay. So for NBFC, ND, NSI, if today asset is classified as NPA, then it will move into substandard category and it will remain in substandard category till 18 months. SSA, substandard asset. All right. After that, it will move into doubtful category. Array for NBFC D, accepting deposits, or NBFC SI, systemically important, it is very much similar to bank. Here too, it is in fact equal to bank. Look at this. Doubtful asset, which remains in substandard category for a period exceeding 12 months. All right. So after 12 months of NPA, in banks also it moves into doubtful. And in case of NBFC, applicable NBFC also, it moves into doubtful. But for NBFC, ND, NSI, it will move into doubtful after 18 months of NPA. All right. Okay. After that, doubtful up to 1 year, 1 to 3 years, more than 3 years, all that classification remains the same. Do not worry about it. All right. So after doubtful, it is doubtful up to 1 year, 1 to 3 years, more than 3 years. That remains the same. Okay. But when it goes into substandard and doubtful, after NPA, substandard. The moment you're classified as NPA, substandard. But for NBFC, ND, NSI remains in till 18 months, it remains as substandard. After that goes into doubtful. Then doubtful up to 1 year, 1 to 3 years, and more than 3 years. All right. Then loss asset definition is the same. Doubtful more than 3 years, or where loss has been identified. Where loss has been identified. Loss has been identified, or it is adversely affected due to erosion of security, and there are negligible chances of recovery. All right. So basically, where loss has been identified. Then this I taught you in bank also, and it remains common over here also, that just because there is some rescheduling or restructuring of the assets, then banks, NBFCs cannot start upgrading those assets. Today, a substandard asset comes for restructuring. All right, then please renew my loan or restructure my loan. Then all of a sudden, that substandard asset can't be a standard asset. For upgradation, I told you one thing. If you want to upgrade the category, there is only one thing, and that payment should be received from the borrower. If the borrower starts paying properly, timely, all right, only then it can be upgraded, not because of any other reason. All right. 6.5, asset provisioning. Go slow. Standard asset. In case of banks also, and in case of applicable NBFCs also. It is 0.4%. Standard asset. Because applicable NBFCs, you would have realized up till now, they are almost treated like banks for these provisions. Correct. For others, it is 0.25%. Be careful, MCQ. I'm worried only about these MCQs, because even if student sees this once and goes slow, correct, then it can be done. But if a student is very fast, tries to leave it in option, then there is a problem. You ask December 21 students who left audit of banks and NBFC in option. 12 to 14 marks hit they got in their paper. You ask January 21 students who left peer review, quality review in option. They got 12 to 14 marks hit in their paper. So any 2 to 3 topics are questioned heavily. Then from other topics, there is a 2 mark, 3 mark thing only that is asked. All right. This part 4 is very naughty. Provision towards standard asset need not be netted off from gross advances, but shall be shown separately as contingent provisions against standard asset. So it will not be directly set off, subtracted from the advances. It will be, this provision amount will be shown separately as contingent provisions against standard assets in the balance sheet. Yeah, contingent means it is not shown in the notes to accounts. It is shown inside the balance sheet only. Just that the heading is such that contingent provision against standard asset. Hello? Yes, sir. Next, substandard asset. Compare it. चलो ये थोड़ा काम करो. Compare it with audit of banks. What was audit of banks by substandard asset? What was the provisioning percentage? Either compare it, see it, or type it very fast. Substandard asset, what was the provision in case of audit of banks? Go to the NPA norms, find it out. For secured 15%, for unsecured 25%. Very good. But when we talk about NBFC, substandard asset provision is 20%. 10%. Look at this. 10%. It is less. My God. In fact, the assets are riskier in case of NBFCs, because NBFCs mostly they give risky loans. All right. But provisioning is 10%. Fine. For substandard asset. I really don't know the reason, because I think RBI is not interested in putting too much burden on the P&L of NBFCs. Then doubtful asset. Doubtful asset. Look at banks. What was that? Doubtful up to 1 year. How much? 20? 25. Okay. And doubtful up to 2 years. Okay. So I will name this as D1, D2, D3. D1, 25. D2, 40. D3, whether secured or unsecured, 100. All right. So here unsecured is 100, which tallies with audit of banks. Correct. But when we talk about secured, D1 is 20. Over there it was 25. Over here D2 is 30. Over there it was 40. Whereas D3 is 50. Oh my God. D3 is sensitive. Whereas over there it was 100. Loss asset 100%. That is okay. That has to be 100%. When I say 100%, means can I say that the asset is written off from the books of accounts? Yes or no, sir? Yes or no? No. It means it is recorded at zero value, 100%. But we don't say that it is written off. It is not deleted from the books, right? It is not written off from the books. So we understand one thing, that the only way of studying this properly is go slow and compare it with audit of banks. I hope that over here somewhere you would have written compare with audit of banks. Yeah. We are very alert students, no? Okay. In fact, from here itself you should start. Compare with audit of banks. You can write the point numbers, page numbers, at least something that motivates you to study. You understood, no, what I will do with you in integrated case study based MCQs? So I will print, I will give you the assets. I'll give you that for how many months they are overdue. All right. And then I will ask you, what will be your response if you're conducting audit of a bank? What will be your response if you're conducting audit of NBFC, ND, NSI? What will be the percentage of provision if you're conducting audit of bank? What will be the percentage of audit of NBFC? They haven't tested this in the MCQ part, like how I'm asking. No, they have not drafted such a case study. My God, you can just, they can just put up 10 marks question, 10 marks case study, or by just printing the assets and the aging analysis since how many months they are due. And they can put up the whole case study of 10 marks, And okay, for bank, how much, for NBFC, how much percentage over here, there and stuff. Yes, yes. Seventh point, relax. Congratulations. You are outside the income, asset, and capital part. You are out of that now. All right. And the income part you haven't read only. Look at this 6.2. Otherwise, you will say that the portion is pending. Look at this NPA income recognition. Hey, income recognition principles remain the same. Because that is normal accounting concept that if an asset is classified as NPA, obviously, whatever income has been booked but not realized must be reversed, must be fully provided for. Further income will be booked only on receipt basis. And that provisioning of asset I already discussed. Yes. So income recognition is same, yeah, as we discussed in banks. Thank God I finished that. Otherwise, you would have said portion incomplete. Okay. Seventh point. Classification of fraud by NBFC. We are out of this. We are out of that prudential norms now. Relax. Classification of fraud by NBFC. Sir, from where you are reading this? RBI had given a circular of monitoring of frauds 2016, which is still applicable, correct? And this is a very big circular and very good circular also, where they have exactly given that, okay, if you find an fraud amount of 25 lakhs, how you are supposed to consider it, where you are supposed to report it. There is a department of non-banking supervision of RBI. There we are supposed to report such frauds. It was also there in the earlier version of the modules, but now they have deleted that, how you are supposed to report the fraud. That has been deleted. They have just included this, what are the different types of fraud that you may identify. Understood this? But they have deleted that how that fraud needs to be reported. In company audit, we did know that section 143 subsection 12 duty to report fraud. Similarly, there was one full reporting requirement over here. Now, how to report fraud, but that is no more. So everyone over here, I'll just type fraud. As you can see, classification of fraud by NBFC. That's it. That's it. All right. Yes, sir. Yes, sir. I am expecting that in further versions they may bring it back. I think someone was drafting the module and by mistake it got deleted. Yeah, article se bhi aisa mistake hota hai na, in your report you almost delete one full paragraph only. All right. I don't know why it was deleted. It was such a good discussion how fraud needs to be reported. And as an auditor, at least you should know how fraud needs to be reported. All right. But I don't know why they have deleted it. Fine. Everyone over here, I think someone has drafted this NBFC module on Saturday night, 2 a.m., 3 a.m. or something. So classification of fraud by NBFC. So this is the only thing that they have given. I am having fun at CIA. All right. So look at this. M, misappropriation and criminal breach of trust. Hey, what are different types of fraud here? Either you may find misappropriation of assets or breach of trust. All right. Then fun, fraudulent encashment through false instruments. Yes. So someone may come to that NBFC, give wrong documents to them. All right. Wrong documents of that they are holding land or building, and then they may get a fraudulent encashment through false instruments, manipulation of books of accounts, or through fictitious accounts and conversion of property. So basically fraudulent encashment. These two words at least you should remember, fraudulent encashment. Next, fund mein you, unauthorized credit facilities extended for reward or for illegal gratification. So the directors and employees were given nice gifts by the borrowers and they extended unauthorized credit facilities. Yes. And negligence and cash shortages. What is cash shortage? So basically in ATM, there is no money, that is cash. No, Baba. Cash shortage means, everyone first. Yes. Cash shortage means the actual cash that they have is not tallying with their books. Correct. That is cash shortage. This is basically the suspense account that has got created. All right. So everyone, in this cash shortage, there can be a cash shortage of 2 rupees, 3 rupees also. Sometimes there is this reconciliation difference, no, 100 rupees, 1000 rupees, 2000 rupees. Correct. So look at this. The following cases where fraudulent intention is not suspected, proved at the time of detection, will be treated as fraud and reported accordingly. The following cases where fraudulent intention is not suspected or proved. Still it will be reported. Now, why this clarification came from RBI? Let me tell you. See, this circular was all about fraud reporting. All right. In fact, it is about, let me not say it in past tense. This circular is all about fraud reporting. All right. So for fraud, can I say the first thing that needs to be established is an intention to deceive the other person, to cheat the other person. Correct. So let us say even if there is a cash shortage of 50,000 or 60,000, that means the cash, that is actual cash, is not tallying with the books. Correct. So somewhere a suspense account has got created. If that is even of 50,000, but let us say that auditor is of the view or management is of the view that this is a clerical error and there is no intention to cheat the other person. So based upon this argument, they were not reporting the cash shortages to NBFCs. I mean to RBI, sorry. NBFCs were not reporting cash shortages to RBI. Are you getting my point? Yes or no, sir? That is why RBI came up with a clarification. Bola, hey, over smart people. Even if there is no fraudulent intention, still a cash shortage of more than 10,000, by default, you please report it to RBI. Then RBI will see what to do with that. Are you getting my point? Yes or no, sir? Yes, sir. So I'm telling you from where this language came up, that even if there is no fraudulent intention, because this whole circular was for fraud reporting. So they can always say that, okay, there is a cash shortage of 2 lakh rupees, but there is no fraudulent intention. Understood this? So we are not reporting it to RBI. RBI said, you please don't decide that. If there is a cash shortage of more than 10,000, shut up your mouth and report it to us. Am I clear with this? Yes. However, they also said that if there is a cash shortage of more than 5,000, if detected by management, auditor, inspecting officer, and not reported on the occurrence by the persons handling cash, that also needs to be reported. So I'm not understanding this point. Then I think I need to give you a chart. Everyone over here. Cash shortage means cash in hand not tallying with the accounted cash. All right. If this difference is more than 10,000, then it must be reported to RBI. If this difference is more than 10,000, then it must be reported to RBI. If this difference is within 10,000, all right, then within 10,000, then we will have to divide it further into 2. Difference is more than 5,000 or difference is less than equal to 5,000. If difference is less than equal to 5,000, for sure ignore. Means no reporting required. All right. No reporting required. If difference is more than 5,000, then as management of NBFC or as auditor, you will have to analyze that case. What happened? Achha, there are cashiers who are handling the cash, correct? So they tally whatever cash has been collected, how much has been recorded, correct? So who is the first person who will come to know that there is a cash shortage? The cashier. The cashier, he will come to know. If the cashier has reported it to the higher officers in the management, correct, then that cashier is an honest person. At least he has reported it. So they are saying that for difference more than 5,000, if the cashier has reported it to the higher authority, higher management, then in that case you need not report. All right. But if the cashier has not reported it and someone, some other persons from the management or inspecting officers or their internal auditors, they came to know about this cash shortage, then even if difference is less than 10,000 but more than 5,000, you will report it. Am I clear with this? Yes or no, sir? Yes, sir. So if difference is more than 5,000 but within 10,000 rupees, because more than 10,000 anyways has to be reported. If difference is more than 5,000 but within 10,000 rupees, then we will have to divide into 2. It was reported by cashier or it was not reported by cashier. If it was reported by cashier, no issue. Then you will ignore. However, not reported by cashier, then it has to be reported to RBI. RBI has a separate department only. Every region wise, big cities wise, they have divided these zones and they have this department of non-banking supervision where it needs to be reported. So RBI means don't think that it will go to RBI Delhi or somewhere or RBI Mumbai and stuff. Every NBFC is given a zone that for you, this is the office to be reported, where you are supposed to report everything. Department of non-banking supervision of RBI, based upon their zone, city, district. All right. Is everyone through with this? Yes or no, sir? Yes. Because rather than explaining it 3 times, I thought I'll make you write 1 time. That will be better. Okay. So everyone now, don't forget what was our main answer. We are discussing about classification of fraud by NBFC, which has been asked n number of times in the paper. So I am having fun at CIA, misappropriation and criminal breach of trust, fun, fraudulent encashment, unauthorized credit facilities, negligence and cash shortages, any case of cheating, forgery, irregularities in foreign exchange transaction. Yes. So C for cheating, forgery, I for irregularities in foreign exchange transaction, and any other type of fraud not coming under the specific head above. So any other type of fraud. Sir, is it important to maintain this language only? Yes. For this answer, yes, because these types of fraud are given in RBI circular. So we cannot change it. All right. So misappropriation and criminal breach of trust has to be written as misappropriation and criminal breach of trust. For the second point, if you don't remember the full point, at least this fraudulent encashment, these 2 words should tally. Then third is unauthorized credit facilities. You cannot compromise on this phrase. Negligence, cash shortage, cheating, forgery, irregularities in foreign exchange, any other type of fraud. You need to maintain this language. Am I clear with this? Yes, sir. Yes, sir. Classification of fraud by NBFC. Next, 8th point. Compliance with NBFC auditor's report. RBI directions. Yes, what is this? Let me tell you that RBI has given directions and they have given separate matters upon which auditor needs to conduct inquiry and make a report on that. Yes, they have given full-fledged circular only for the auditor. They have said, hey, auditor, conduct inquiries on these points and report it to the management. I mean, include it in your audit report and give it to the management. All right. So this reporting requirement that we are going to study, it is in addition to section 143 of Companies Act. Arey, why there is a reference of Companies Act over here? Arey, why NBFC is a company registered under Companies Act. Hello. So obviously, whatever a company audit report or company's auditor report, whatever he has to do, that needs to be done. In addition to that, this is an additional reporting requirement. Am I clear with this? And hello, let me tell you, this is not included in our audit report. This is a separate report. We'll submit it along with our audit report, but this is a separate report, which is given to the board of directors of NBFC. This is not a report given to RBI. This is a separate report given to the board of directors of NBFC. And all of a sudden, the person who was drafting the module felt that let us print the bare circular as it is. This is bigger than Caro. Look at this. Full bare circular as it is. Till here it continues. And it's not like in every attempt they ask questions from this. Once in 5 or 6 attempts, you may find a question on this. Are you getting my point? From this particular point. Last, though, I don't remember. I think November 16 or 17 somewhere they asked. Okay. So what I have done is, sir, then leave it in option. No, no, no. Wait. What I've done is I have printed a condensed form of this circular. Achha, means you have deleted points? No, the same points I printed, but in some keywords and broadly as if students need to remember this. All right. So I have analyzed every single line, and from that I have converted, translated that into a shorter phrase, and I have printed it over here. Because if question is asked from these clauses, and in the question bank there, in module question bank, there is a question on this clause, so it's not like they're ignoring this, correct? So if a question is asked on these clauses, at least you should be in a position to write it. Are you getting my point? So I will cover it smartly in a shorter time, but ensure that at least you are not filtering further than this. Are you getting my point? So you'll be like, let me make short notes out of sir's short notes. Then it will be shorter. I mean, the shortest notes that you have invented, maybe. All right. So it will, don't create summaries of summaries. There are few things where I've printed summaries. You don't create summaries of summaries. All right. Over here, 8.3 matters to be included in such report. What is this? That we forgot. This is a separate report given to the board of directors. Auditor must conduct inquiry on these matters. Now they have divided this circular into three parts. One is auditors of all NBFCs. What are the points that on which they need to conduct inquiry? Then second, if you are conducting audit of such NBFCs which are accepting public deposits, then as an auditor, what kind of inquiries you need to conduct and what kind of comments are required in this separate report. Obviously, highest number of clauses are over here. Why? Because NBFCs which are accepting public deposits, they will be much more regulated, no? All right. Okay. Then NBFCs not accepting public deposits, there are some points that we need to check. Yes, sir. So everyone over here. In case of all NBFCs, first, RBI will be worried about whether the company has obtained a certificate of vitamin D. Certificate of registration na yaar. और क्या टेंशन होगा आरबीआई को? Next, whether that company is entitled to continue to hold such certificate of registration. This is basic question that RBI will be worried for all NBFCs. Correct? Whether you're accepting deposit, not accepting deposits, RBI will be worried about registration requirement. Whether the company is meeting the required net owned fund requirements. So, curly bracket, COR and NOF. At least remember these two phrases. For all NBFCs, certificate of registration and net owned fund requirement. Stay connected. Stay connected. All right. Now listen to me. Listen to me. Why I am teaching these points? Let me introduce one repeatedly asked examination question. So on all of these clauses, auditor needs to conduct inquiry for as per their category. For all NBFCs, NBFC accepting public deposits and the other NBFCs not accepting public deposits. Wait. After conducting inquiry, auditor has to prepare a separate report giving his comments. Correct? That report will be given to the board of directors. Yes, sir. But if there is any negative remark, qualification, reservation, adverse remark, then it also needs to be reported to RBI. So I am repeating. For all the NBFCs, these three clauses. For public deposit NBFCs, these 12 clauses. And for not accepting deposits, these 5 clauses. Auditor needs to conduct inquiry, prepare a report, table that report in front of the board of directors. However, for all the points wherever there are negative remarks, auditor needs to prepare a separate exception report. Auditor needs to prepare a separate exception report. And that exception report will be given to the board of directors and will also be sent to the Department of Non-Banking Supervision of RBI. Am I clear with this? Yes. Yes, sir. So read this 8.4. That 8.3 is pending. But I want to introduce 8.4 now so that you become more serious when you are reading 8.3. Look at this. Where in auditor's report, the statement regarding any of the items above is unfavorable or qualified. Negative remarks. All right. Then auditor should provide the reasons for the same. And he should make a report of such qualified remarks non-compliance to the concerned RO. RO, Kent RO. No, regional office of the Department of Non-Banking Supervision of RBI. All right. The duty of the auditor for reporting to RBI shall be to report only the contraventions, only the exceptions, only the exceptions. All right. And such report shall not contain any statement with respect to compliance. Don't waste the time of RBI office. They want to focus only on exceptions wherever things are going wrong. Am I clear with this? Yes. This has been asked multiple times in exams. This knowledge that you should have. All right. In old course, there were some theory questions asked. Please mention that please explain the duty of exception reporting to RBI. Only one line question. Now the new course, they have this whole story, then they give the question and stuff. All right. But you should remember this. Now wait. Let me connect the dots so that you feel the benefit of attending a lecture in a focused manner. Yeah, we want to feel the benefit. Show us the benefit. All right. This question of net owned fund, which I showed you earlier. Yes, I'm coming back to that question. 10. Abhimanyu Finance Limited is NBFC, and it was in the business of accepting public deposits and giving loans since 2015. The company has net owned fund of 1 crore 50 lakhs and was not having registration certificate and applied for that in 2021. One is there will be a negative comment in Caro for sure, correct? Because in Caro we are supposed to comment upon this. But that chalo, Caro chodo. Caro Maro we will do later on. All right. But advise the auditor with reference to audit procedures to be taken and reporting requirements on the same. Tell me something. As an auditor, I am supposed to at least now conduct an inquiry. You saw that in our textbook that RBI has put a duty on us to conduct an inquiry on certificate of registration and net owned fund requirement. Yes or no, sir? Yes, sir. So I have to conduct an inquiry. Now they are not maintaining net owned funds and they are also not complying with registration requirement. So can I say there will be a negative report? There will be an exception report? Yes or no, sir? Yes, sir. Exception report will go to the board of directors and also to the RBI. Plus there will be a negative comment in Caro. All right. So that is why that certificate of registration and net owned fund requirements are very important. Are you getting my point? Because they can be connected with multiple discussions over here. They have said, if I am the paper setter, what I would have done in this particular question, listen to me. Hey, we don't want to listen to you. See, you block me later on, but at least now listen to me. I wouldn't have given this phrase only. This is wrong. Why are they giving hints to the students? Please mention the procedures and reporting requirements. All right. Now it becomes a good question. So student has to sit and think, reporting requirements. Everyone will write about Caro because Caro is famous topic, no? And all YouTube professors also give videos on Caro. All right. Caro is very famous. Telegram channel, everywhere you will find Caro. So Caro clause everyone will remember. But rarely some students will remember that there is a separate circular by RBI on which we need to conduct inquiries and we need to give an exception report to RBI because that is also one of your reporting requirements. Am I clear with this? Yes, sir. Okay, that is why you are studying this. So before you decide to leave this topic in option, be careful. 8.3. I am now at least you will study these matters with some interest that why are you reading this? All right. So in case of all NBFCs, don't forget RBI wants us to conduct an inquiry on COR and net owned funds. Yes, sir. This is much sensitive that NBFC accepting public deposit, all the clauses are not that sensitive. In case of NBFCs accepting public deposits, there are 12 inquiries to be made. First inquiry, whether PD is accepted. What is PDs? Public deposits. Or plus public unsecured NCDs, borrowings from shareholders, borrowings not excluded from the definition of PD. Basically, they are talking about all the public deposits. Is within the admissible limit. Just circle one word, limit. RBI always prescribes the limits up to which maximum NBFC can accept public deposits. All right. So on the left hand side, please write down the word limit. All right. Next. whether the excess public deposits above permissible limits have been regularized as per RBI norms. If excess public deposits have been taken, RBI has asked them that how things can be regularized. Basically, see, I'll tell you, they have not printed everything. They say circular de diya. NBFCs are allowed to accept public deposits based upon their total assets and their net worth. Are you getting my point? So if they accept excess public deposits, they are either supposed to refund it or ensure that they maintain their assets and net worth in such a manner that it fulfills the ratio. Understood this? So basically, if there is any excess, whether it has been regularized as per RBI norms. So what about excess regularization? Excess regularization. So if there is anything above the limit, it needs to be regularized. You know what? If NBFCs want to accept public deposits, they need to have some minimum credit rating, investment credit rating and stuff. They need to get this credit rating done from credit rating agencies. And there is a minimum credit rating ratio also of investment, but I will not say that. No, say it is B plus, no, or A plus. I don't want to get into that. If I write anything over here, you will unnecessarily vomit that. So you should know that there is 1 point on credit rating. Say, but is it given in the module? Arey no re papa. 1 point on credit rating. Next. Krar hua ikrar. Arey krar, hello. Capital risk adequacy ratio. Remember that krar? Yeah. Hello. What is the krar for NBFC, NDSI and NBFC-D? Come on, tell me. 15%. And minimum tier 1 capital 10%. For gold jewelry 12%. Yes, tier 1. So they can question you over here. See how dots are getting connected. Okay, so CRAR. Next, whether NBFC is referred in clause 3, sorry. Minimum credit rating, I told you. Whether credit rating is in force, see, they are basically 2-3 points on credit rating. That is how we should remember. So whether they have got the credit rating, whether credit rating is in force, as per the credit rating, their limits are fixed. As per credit rating, their total assets, net worth, all right. So whether PD has accepted, PD means public deposit, accepted has exceeded the amount approved by credit rating agencies. It should not exceed the amount approved by credit rating agencies. So again, points on credit rating. Next, whether there is any violation of any restriction placed on acceptance of public deposit as per RBI directions. Basically, there is 1 point on whether the company has complied with RBI guidelines or not. All right. And RBI may put some specific restrictions on some NBFCs regarding acceptance of public deposits. All right. So RBI guidelines. Whether the company has defaulted, 1 point on default. Anyways, if the company has defaulted, there is a comment in Caro also for this defaults. Yes, sir. Whether the company has complied with prudential norms, income asset classification of NPA. So tell me, this whole over here, whatever clauses you are studying is for NBFCs accepting public deposits. So tell me, if NBFC accepting public deposits, hello, if it has not classified an asset which is overdue for more than 3 months as NPA, then can I say it has violated the norms? Yes or no, sir? Yes or no, sir? मैं लाइट पड़ेगा सिर पे पड़ेगा जल्दी जवाब दो मैं फोड़ देगा all right okay of course it has violated because for NBFC accepting public deposits, if the installment remains overdue for 3 months or more, they need to classify it as NPA. All right? Yes. Now, if it has not classified it as NPA, then it has violated the prudential norms. Understood? Yes. So in that case, as an auditor, you will have to give a negative report over here. And since it is an exception, it will also be reported to RBI. Yes, sir. That is why all of that was important. Now the students who did not focus earlier would be regretting that this whole chapter is bloody connected. So income, asset, income, NPA, capital, all prudential norms. Next, whether the company has complied with liquid assets requirement. Yes, there are minimum liquid assets to be maintained, but don't worry, all that ratios are not printed. Just that someone felt, let us print the whole circular without any background in the module, so they printed it. Right. So liquid assets requirement as prescribed by RBI. So just underline this liquid assets. And communicated the details of the bank where designated securities are held. Basically, wherever they have bought the designated securities, I'll tell you what are liquid assets: gold, cash, government securities. All right, these are all liquid assets. So NBFC needs to have some amount of liquid assets with them. It is very much similar to that CRR, SLR kind of requirements. So they need to have some amount of liquid assets with them. Now, for government securities, NBFCs would have, bought the government securities through some bank, or they would have kept their designated securities with the bank. So that is why those details are required. Basically, full clause is about liquid asset maintenance. Yes, sir. Then NBFCs accepting public deposits, they need to file a regulatory return containing details on how many deposits they have accepted with RBI. Then they have to file a quarterly return, quarterly details of prudential norms compliance with RBI. Then if they have opened or closed new branches accepting public deposits, then in that case also the question is whether RBI norms have been complied or not. So these two details about regulatory returns. Regulatory returns. And last point is about branches. I don't want you to remember every single word over here, but at least these broadly these points, okay, that these points are asked over here. Even if you recollect, forget about the clause number and stuff. Even if you recollect that yes, there are such reporting requirements, then it will help you a lot. Okay. Next, in case of NBFCs not accepting public deposits, they are worried about, first of all, the board of directors should have passed a resolution for non-acceptance of any public deposits. The company should pass a resolution so that every single employee officers, they are aware that they are not supposed to accept public deposits. Next, whether the company has accepted any public deposit during the relevant year. They are not supposed to accept, no. We are talking about this circular, this particular 5 set of clauses is for such NBFCs which are not supposed to accept deposits. So first, they should have a board resolution. Then they are saying that, hello, please check, is there any PD accepted? Because they should not accept PD. Then whether they have complied with prudential norms. See, even for NBFCs not accepting deposits, hello, let us say NBFC NSI. Sorry, let us say NBFC SI, not accepting deposits. Even this company is important, correct? Even this company is important. So obviously they'll be worried about that. Okay. So that is why this separate set of clauses came up. Whether NBFC NDSI, please cancel this NBFC D. For specifically, they're asking for NBFC NDSI. Systemically important. Even they need to maintain CRAR of 15%, no? Even they need to maintain CRAR of 15%, no? Yes or no, sir? हेलो, मेरे को रिप्लाई, मैं प्लास्टिक खा जाएगा, रिप्लाई करो. All right. Next. With your non-replies, now I'm getting suicidal tendencies. Okay. Next. For NBFC NDSI. Annual statement of capital funds and risk exposures submitted to RBI. They have to basically give this annual return. That is okay. Not a problem. Whether NBFC has been correctly classified as NBFC MFI. If there is any MFI microfinance institution, they are just asking that please check whether it has been properly classified as such. Now, for NBFCs, look at this last category, 4th category. I said that circular is into 3 categories. Actually, it is into 4, but 3 you need to remember. 4th category. For NBFCs which are not required to hold certificate of registration, their auditors need to check that whether they are complying with the exemption conditions or not. Because if they are exempt, then there are some conditions, correct? Then whether they are exempt from those, whether they are complying with those conditions or not. Because if they violate those conditions, then they will have to go for registration. Yes, sir. Yes, sir. Very good. So please be careful with this whole point. Yes, sir. All right. Now look at the ninth point. Audit procedures. Audit procedures. There is a separate section, there is a separate paragraph created in the module, a separate section discussion, where there's given about audit procedures. As an auditor, what kind of procedures you will perform? First, as an auditor, how will you verify the registration compliance by NBFC? Hey, then why you have not given answer? Cheater, give us refund. Wait, I said refer point number 2 over here. You know what are registration requirements when NBFC is supposed to get registration. So as an auditor over here, you have to just write check whether, check whether, check whether, check whether. Check whether their financial assets, check whether their in total financial income is more than 50% of the total income. All right. Check whether they have obtained duly, a proper registration from RBI. Check whether they are maintaining net owned fund requirements of 2 crores. Check whether, check whether, check whether. Check whether such NBFC is exempt or not. Check whether, check whether, check whether. And am I clear with this? Yes. So that same point which you understood earlier, you have to write it like a checklist. When I'm going to end the lectures, I get a faster reply. I think there's some connection over there. We want to go, yaar. Yes, mein time pass karta hai. Jaldi bolna. 9.2, verifying compliance with prudential norms. Compliance with prudential norms, income, asset, classification, that capital, income, asset, capital, prudential norms. Yes. Sir, when we travel in railway train, no, ऐसा ही सिंह बेचने को आता है. Income, asset, capital. Okay. So look at this. Check compliance with prudential norms covering income, asset, capital, etc. Right. There are lots of prudential norms circular given by RBI, but your module is talking about income, asset, and capital. All right. So you just write 2-3 examples of prudential norms: income recognition, asset classification, capital adequacy norms, etc. All right. Now, as an auditor, how will I check the compliance? I should check whether the NBFC has some kind of internal policy for granting loans, correct? Whether they have some array, basically, whether they are classifying assets as NPA properly, asset classification, income recognition, capital adequacy. So 1 point I will write on asset. Then 2nd point I will write on NPA and stuff. Then 1 point I will write on whether they are maintaining adequate capital. 1 point I will write on income recognition, that if an asset is classified as NPA, then the income booked but not realized must be fully provided for, and further income should be recognized on receipt basis. 2-3 points I will write like this. I will get my 4 marks. I will come back. All right. That is how your approach should be in such kind of audit checklist answers. Am I clear with this? Hello? Yes, sir. Reply. Okay. Next, 9.3. This they have asked multiple times, compliance with prudential norms. And I'm shocked to see that students were getting 0 out of 4. Why? They were not aware about this word prudential norm. So students ko pata hi nahi tha that they were supposed to write on this income, NP and capital. Otherwise, they would have scored 4 on 4. Next, 9.3, verifying compliance with acceptance of public deposit directions. I can't do this in short. All right, just put a question mark. So I'm not completing the whole topic as of now, but let me just finish off what can be done. 9.4, general points for auditing NBFC. Oh, bhai, listen to me. Auditor, they said general points for auditing NBFC. Now NBFC, what is their business? They give loans, they invest, all right, or so many things that they do. No, then in that case, just keep on writing. Imagine if you're conducting audit of NBFC which has made some investments. Verification of investment. If they have physical securities, verify physically evaluation of investment. Then whether investments were done with proper approval, authorization or not. Done. NBFC is giving loan. Verification of loan documents, loan authorization, loan sanctioning, then the recoverability of that loan. You can go on and on. Hello, because now you know NBFC business. That is why I have positioned this point as the last point. Understood this? So that after discussing banks and NBFC, if students can't write on audit of investments and audit of loans given, correct, then I should stop teaching. Forget about you stop learning, I should stop teaching. All right. So you can easily write this, not a problem at all. Yes, yes, sir. Just put it under read once category. Yes, Shambhavi. Dividend interest and stuff. Yes. Then there are few clauses of Caro which are connected with NBFC. So that I will discuss along with Caro. All right. Okay. NBFC topic is not over. I need to give finishing touches to this topic and I need to discuss the question bank also. All right. Which I'll continue further in the next lecture.